What's up, my fellow wealth creators? Matty Ice here. In this video, we are going to answer the top 10 questions about infinite banking so that you can make a decision as to whether or not this really powerful financial strategy makes sense for you. And even though it is a very powerful financial strategy, it is certainly not for everybody. Everybody's goals and situation is different. The risk tolerance is different, etc. Right? All of that is going to play into whether or not this particular type of strategy makes sense for you or not. Okay. Now, if you're anything like me, once you start to learn how it actually works and all the benefits you get, you'll quickly realize that it is far superior to what we're normally taught to do when it comes to building wealth. The traditional financial playbook that's kind of shoved down our throats for our entire lives, which is, go to school, rack up the student loan debt, get your job, get the promotions, stuff money into your 401k with mutual funds and bonds. And by the time you're 65, 70 years old, you'll be a millionaire or whatever, right? And that's just not working out for a lot of people. There's a lot of problems with that. There's nothing necessarily wrong with it. But here's the question I like to ask people is if there was a far more effective, efficient, just better way to reach your financial goals so much faster, would you want to at least explore that? Well, I would think the answer is yes. That's why I think everybody should at least explore infinite banking. It doesn't mean that it's always going to be a good fit. That's all. But how do you know unless you know what your options are, unless you know how the strategy works, right? I could tell you from personal experience that infinite banking has been an absolute game changer in my life. It has made such a huge difference in not just my own personal finances and wealth building journey, but also that of my some of my friends and family. I've actually used infinite banking, my whole life policies to help family and friends consolidate high interest credit card debt. It's a great way to implement infinite banking. If you're paying 25, 30% interest on credit cards, why not consolidate that with a policy loan where you're paying 6% and your money continues to grow at the same time, right? It's a really, really effective way of taking back control of our money and stopping the outflow of our money to these third-party institutions and recapturing a lot of that wealth, a lot of that lost opportunity cost. It's very powerful. All right. With that said, make sure you guys, if you are actually interested in infinite banking, I have a free infinite banking masterclass that I will link to in the description. It's totally free. Just let me know where you want me to send it. And it goes into a lot more detail about the strategy and how I've been using it in my own life over the last 3 years to accelerate the wealth building process. Right. So let's get into it. Question number one, what is infinite banking? All right. So when I'm like everybody's definition of this is a little bit different. If I were to give like a surface level definition, I would say that it's a financial strategy that utilizes an overfunded, high cash value, dividend paying whole life insurance policy to save and store capital. It allows it to grow uninterrupted while also being able to use that money for things like emergencies and wealth building opportunities. The analogy or example I like to give is this. Imagine if your bank called you up and said, hey, Matt, just want to let you know that we have this brand new savings account and it's going to pay you 4% tax-free compound growth for the rest of your life. And here's the thing. We're going to let you use the money in the account to cover emergencies and or take advantage of wealth building opportunities like you normally would without interrupting that tax-free compound growth. And then as a cherry on top, Matt, what we're also going to do is we're going to give you a death benefit as well. Meaning if you were to pass away, the money in the account is going to 10, 20, 30x into a massive income tax-free death benefit to your loved ones. Is that a savings account that you'd be interested in? If the answer is yes, then, which I think most people would agree, that would be a pretty sweet savings account, would it not? If the answer is yes, then infinite banking is definitely worth at least exploring because that's essentially how it works in a nutshell. All right, we'll get into more detail on that. And I want to be clear. We're not using a savings account. This is dividend paying whole life insurance. All right. I want to be clear on that, but we'll get into more of the details on how that works as we answer more of these questions. All right. Question number 2 is infinite banking a scam? Well, is real estate a scam? Is the stock market a scam? Are 401k is a scam? No, these things are just strategies and financial vehicles. And typically when I hear this question, usually it's somebody trying to sell something else, or it's somebody that's been burned, has lost money doing something, and then they think of it as a scam. Well, here's the thing. I've lost money in real estate. I've lost money in the stock market. I've lost money in cryptocurrency, right? Does that mean that they're scams? No, it just means that I need to up my game, my financial intelligence, my understanding of these strategies and assets to fully take advantage of them. Now, are there scams out there? Of course. Okay. But this is just a financial strategy, a unique way of using a specific type of financial product. That's it. Now, if you don't design the policy right, if you don't use the policy right, you don't implement the strategy correctly, then you could potentially get into a lot of trouble. There could be some very serious negative financial consequences. All right. But that's why you don't do any of this without understanding exactly what you're doing. All right. And here's the thing, you don't have to become like a full-on expert, right? You don't need to have a Harvard level degree of education in order to do these things. But you better be able to teach at least the basics to somebody else before you pull the trigger, because these are major long-term financial decisions that we're talking about. So you want to make sure you understand what you're doing so you don't lose money, so you don't get hurt. And it actually does help you with what it's supposed to do, which is to accelerate the wealth building process. But it's absolutely not a scam. I've been using it in my life for the last 3 years. It has been phenomenal, guys. It's awesome. All right. Question number 3. Is infinite banking only for rich people? Definitely not. With that said, there is kind of a minimum amount of savings that you want to be able to put away every single month. There's a minimum amount that you probably want to get started with, but by no means do you have to be rich at all. Typically, I'm getting into a little bit of the details here. I'm not going to get too technical. If you want a more detailed video on how these policies are designed, drop a comment down below and I will send that to you, because there is a specific way that you design whole life insurance policies for something like infinite banking, right? We're not talking about the traditional whole life policies that Dave Ramsey likes to rag on, horrible investment, terrible place to put your money. We're not talking about those. We're talking about custom designed, high cash value, dividend paying whole life insurance, okay? That's what we're talking about. But the minimum that I recommend starting with the first year is a minimum of around $10,000. You're going to front load that into the policy. Doesn't mean you have to put $10,000 into it every single year, but that's kind of the minimum that you want to start with. So you get a good amount of cash value that you're able to utilize, etc. Also, the more you start with, the more your policy is going to grow, not from a rate of return perspective, but just like if I were to take that 4% example, which is typically what these policies will grow by net after expenses, around like 3.5% to 5%, give or take. We use 4%. Would you rather earn 4% on $10,000 or $100,000 or $50,000, right? But like the higher the number you start with, the more that compound growth is going to be able to work for you. So the minimum is usually 10,000, and then from there, as long as you're able to save maybe $200 to $400 a month, you can start there, and you can always get more policies later on, assuming you can qualify. But you at least want to get started at some point, okay? And then if you're not at that point, what you can do is get what's called a convertible term life policy. That way you're locking in your insurability. You have the death benefit protection for your loved ones, but then you can convert that into a whole life policy later on when you're in a stronger financial position to do so. All right, hope that makes sense. All right, question number 4. What type of life insurance do I use for infinite banking? It's 100% high cash value, dividend paying whole life insurance. All right. A lot of agents out there are spreading this like wildfire about IULs, index universal life insurance. Here's what I prefer. I usually say about it is, can you use index universal life insurance for infinite banking? You could try, right? Because you could borrow against cash value in an index universal life insurance policy. All right. But just because you can do something, does that mean you should do it? No. See, I can cross the street in the middle of 5 o'clock traffic and not look both ways and not wait for the green light on the pedestrian crosswalk to go. I can do that. Should I do it? No, because I'll probably get run over, right? So there's a lot of issues that can take place with an IUL. It doesn't mean that it can't work, but for me with IUL, it's not all the things that can go wrong, all the things that can be changed by the life insurance company that can have a significant negative impact on the long-term performance of the policy. It's not worth the additional potential 1 or 2 percentage points of growth over a whole life policy. Like the risk reward is not there. So can you use a different type of policy? You can, but why would you? Just to get an extra 1 or 2 percentage points of growth potentially? You don't even know if that's actually going to happen. No, I'd rather I'd rather have peace of mind within my banking system. I don't take risk, inside of my savings account. Why am I going to take a bunch of risk with my whole life policy? That doesn't make sense. All right. So I'm happy with that 3.5%, 4% tax-free compound growth. I'm going to borrow against it to build wealth that earns far more than that anyways. So dividend paying whole life insurance is the way to go with infinite banking. All right. Question number 5. How many infinite banking policies can I own? This is a good question. So you personally, there's not necessarily like a set number of whole life policies. It really comes down to income, cash flow, net worth, things like that. Like they don't, life insurance company basically doesn't want you to be worth more dead than alive. Okay. So, if you're making $20,000 a year and you're trying to fund a policy at $20,000 a year, you're probably not going to be able to get that. Right. So they're going to limit like how much life insurance you can actually have. So with that said, you can have multiple policies as your income and cash flow and net worth continues to increase, right? Which is a good thing. So right now I have 2 policies. I plan on adding more as my income increases and as I'm able to save more money, right? Because to me, this is these policies are a very good savings alternative. I don't want to save a bunch of money in the bank because we're not getting a lot of benefit there. Whereas if I save money in a whole life policy, I have access to the money for emergencies and investment opportunities anyways. Why not get more benefits by with those savings, right? See what I'm saying? So as you're able to save more money, you can get more policies, assuming you can qualify, because this is life insurance. You do still have to go through the underwriting process. Your health has to be in good order. Okay. Here's the other thing. You don't even necessarily, let's say your health has deteriorated, right? And maybe you don't qualify for life insurance. You could buy a policy on loved ones, on a spouse, children, business partners, et cetera, key employees. Like as long as you have insurable interest, which the examples I just gave, you have insurable interest there, you can actually you could be the policy owner. You could have somebody else be the insured and go through the underwriting process, and you can have control of all that cash value in that process, in that situation right there. So you don't even necessarily have to qualify for policies yourself. You could have somebody else qualify, but you actually own the policy, you make the premium payments, and you have access to the cash value to implement infinite banking, right? Really cool stuff. And also, I want to be clear, technically there's not really anything, there's technically not what's called an infinite banking policy, okay? We use whole life insurance policies for infinite banking. I want to make that clear. Like, you're not going to call up a life insurance company and be like, hey, I want your infinite banking policy. That doesn't exist. We use whole life insurance policies for infinite banking. Okay. All right. Question number 6. How do I take a loan from a policy? This is a great question too, because this goes to show just how, like, one of the amazing benefits of these policies and how easy it is to get access to capital. It's actually very easy. So there's a couple of different ways. You could call the life insurance company up and let them know, hey, I want to get, based on my cash value, I want to borrow this much. The only thing they're going to ask you it basically is how much do you want and where do we send it? Now, some companies, depending on how much you're asking for, will have you go onto your online portal, which is the other way to do it. That's usually how I do it. I just log in, I type in how much I want, I tell them which bank account to send it to, and it's in my bank account in 1 or 2 business days, depending on what day of the week I request it, right? So it's very easy. There's no credit check. There's no application. There's no income statements, debt to income ratio, none of that. The only step in this is qualifying for the policy itself based on your health. And then how much are you able to fund it? All right. And then that will tell you, and also how you design it, how much cash value you have access to. And at that point, you can borrow it at any time for whatever reason, no questions asked. It's pretty sweet, right? Question number 7. All right. Can I use a policy to pay off my mortgage? All right. So this is an interesting question. You could potentially use it to pay off a mortgage. You could do it in chunks, or if you have enough cash value to just pay off the mortgage, I suppose you could do that. But you could pay it off in chunks, where this is where velocity banking starts to come in. That's a completely separate video. But here's the main thing though. Would you really want to pay off your mortgage? Because now we're starting to talk about lost opportunity costs. So, and going back to, okay, yeah, you can do that, but should you? Like, there's probably better opportunities to build wealth than paying off the mortgage. For example, if let's say you have a 3 or 4% mortgage, okay, but I have an opportunity over here to earn 10 to 15%. Like, so I lend on real estate regularly. I'm about to do my 3rd deal, so make sure you subscribe because I'm going to break that deal down here pretty soon. but I'm going to be lending on a piece of real estate at 13% plus a point. So I'm going to borrow against my policy at 6%, like roughly 6%. I'm going to then give that to my investor at 13% plus a point. Now I'm creating a spread here. My money is continuing to grow in the policy. All right. Because remember, I took a policy loan. I didn't use my own money. My money's growing in the policy. Okay. So that's one way of building wealth there. But now I'm going to turn around and create this spread over here in real estate. Now I'm earning money twice. All right. If I'm going to make that much of a spread, why on earth would I pay off a 3 to 4% mortgage? Okay. So we have to think about the lost opportunity cost of doing something like paying off a mortgage. Now, here's the other side of the equation. Life is not just about numbers. All right. Life doesn't exist on a spreadsheet, as my mentor, Chris Kirkpatrick, says all the time. Life does not exist on a spreadsheet. If you are going to have so much more peace of mind, if you are going to be able to show up in your life so much more powerfully, intentionally, strategically, it's going to improve every other aspect of your life. If you pay off that mortgage, then do it. If that's what makes sense for you. Okay. But we need to look at, we need to take a holistic approach here to how we're using the policy. Like the knee-jerk reaction might be to pay off the mortgage, eliminate that monthly expense. But what if I could earn way more money over here that could cover my mortgage payment plus still have a profit, right? Now I'm building wealth in multiple places at once, right? Hope that makes sense. All right, let's move on. But you can do it if you want. All right, number 8, do I have to pay taxes when I borrow from my policy? As long as you don't mech your policy, like turn it into what's called a modified endowment contract where it loses all of its tax advantages, that comes down to the design of the policy, okay? As long as you don't mech the policy and also don't lapse it too. We'll get to that later though. All right, then no, you do not pay taxes when you borrow against your policy because it's a loan. It's not a taxable event. It's debt. You don't, like when you got your mortgage, pay taxes on all the money you got for your mortgage? No. To buy the house? No, you didn't, because it's debt, right? So we're borrowing against our policy to take advantage of wealth building opportunities, cover emergencies, consolidate debt, etc. All right. So when you borrow, when you do it right, you borrow against your policy, you're not paying taxes. All right. Question number 9. What are the interest rates? The interest rates will fluctuate usually based on, I think it's like the Moody's bond, like the Moody's bond index, I think is what interest rates and like dividend rates, et cetera, follow very closely. So interest rates right now, as I record this, range from between like 5.5% to 7%, depending on the company. Every company is a little bit different. So it just depends. The other thing you could do is get what's called a cash value line of credit. So if, let's say your company is, the life insurance company is charging you 7%, but you can get a cash value line of credit with a bank over here at 6%. Well, now you're reducing your interest costs. You could do that. All right. You're basically utilizing you're putting up your cash value as collateral with the bank, and they're giving you a line of credit on it. Right. You could do that as well. But that's typically the range of the interest rates on the policy loans. Final question number 10. How do I design this type of policy? So first off, I've done an entire video breaking down how to design a policy, how I've designed my policies. If you guys want that video, drop a comment down below. Let me know. I will send that to you. I'll put it in the description as well. But to give a 30,000 foot overview of how this works, designing the policy. All right. So there's 2 primary places that we put money into a whole life policy. You have base premium and paid up additions. All right. Now, if you're setting this up for high cash value, normally, not all the time, but normally what you're going to do is you're going to lower the base premium, which also lowers the agent's commission as well. Keep that in mind. All right. You're going to lower the base premium. That's going to reduce your insurance costs. And then you're going to increase paid up additions, which typically 90 to 95% of what you put in paid up additions is going to show up in cash value immediately. All right. So if you want more cash value, you're typically going to put in more paid up additions than base premium. I like what's called a 25-75 split. You'll hear this term, like the split in design, thrown around in the industry, like the split between base premium and paid up additions. I like doing 25% base premium, 75% paid up additions. Not always, but that's what I do for myself because I do actually like having a little bit more death benefit in the beginning. I have my reasons for that. Some people do a 10-90 split. Some people do 40-60, right? It just comes down to what are you trying to accomplish. Now, here's the other thing. A really great way to design the policy, guys. I alluded to this earlier. I believe it was question number 3 when I talked about front loading the policy, right? Doing that $10,000 the first year, and then maybe you do $2,000 or $3,000 per year after that. just basically comes down to how much money you're able to comfortably save on a regular basis. However, front loading a policy is usually a great way to design it, because it accelerates the compound growth, and you get access to a ton of cash value within the first 30 days. All right. You get that higher number that you're starting to earn the compound growth on. You get really, really good cash value, and you're able to be a little bit more flexible with that base premium and paid up edition split. All right. So that's policy design kind of in a nutshell. There's a little bit more to it than that, but those are the basics to get you started. Okay. So those are the top 10 questions on infinite banking. I want to give a shout out to Caleb Gilliams over at Better Wealth. I saw this in one of his infinite banking videos. Like, oh man, that's really cool. I want to do a video like that too, just giving my own thoughts. So anyway, shout out to him. But I hope this was helpful, guys. I hope this brings a little bit more clarity to this particular strategy. It is really, really powerful when you do it right. All right. So make sure you're working with the right people. If you want to speak with myself and my team to see if this is a good fit for you, I'm happy to walk through my own policies with you if you want, how I'm using it. There'll be some links down below. You can get my Infinite Banking Masterclass. You can book a call with us if you want. Totally up to you. But either way, I hope you guys are crushing it, and I will talk to you in the next one. To your success, Matty Ice is out.